Hello, welcome back. In the previous videos, we talked about understanding the company business model, economy mode, risk, and growth drivers. In this video, we would like to know who are the management of the company, who are the board members of the company. We would like to know their background and experience. First, who are the management of the company? We need to ensure the managers of the company have relevant and a blend of experience in the same industry. We prefer the manager of the company to stay at the same company for long period of time or at least one business cycle because this will show the managers of the company are really committed to the long-term success of the company. We need to be very cautious if there is a frequent changes in the CEO and CFO of the company because if this will show something wrong, something must be wrong with the company culture, or there is a disagreement between the directors, the managers, and the shareholders of the company. Next, we would like to know who are the board of directors. So the board of directors is a representation of both management and shareholder interests. So board of directors usually consists of independent and non-independent members. So independent directors are someone who are not involved in the inner operation of the company. They are never be the supplier or the customer of the company, and they have no more than 5% shareholding interest in the company. Whereas non-independent directors are someone who are involved in the inner operation of the company, or they are major shareholders of the company. In other words, they could have more than 5% of the shares in the company. So if the non-independent directors are the managers of the company, they are usually called executive directors. So a good board is the one where most of the board members are independent, meaning at least half the board members are independent. Because board of directors are the watchdog. It helps to take care the shareholder interest. It helps us to watch the manager of the company. So we need to ensure the board as independent as possible to ensure the shareholder interests are taken care of. And we also need to ensure the board members are not overboarded. What it means is that the board members should not sit more than 3 corporate boards, meaning they are not directors in more than 3 other companies. So when it comes to our case studies on micromechanics, half of the board is independent and the board members are not overboarded as well. So there are 6 directors in the board of the company. There are 3 independent directors, 3 non-independent directors. And the board members are from different backgrounds. They are from legal, semiconductor, finance and accounting. And the independent directors also chair the board committee, so such as the nominating committee, the remuneration committee, and the audit committee. And the independent directors also do not hold more than 3 directorships in other company. So for example, Mr. Kenny here have 1 directorship in Keppel DC REIT, and Miss Lai here also have 2 directorship in other company. So all in all, the board members are okay because more than half of them are independent and the board members are not overboarded. Next, let's look at the management of the company. So I can say the management of the company are really experienced and have been in the same industry for a long time. So the founder and the CEO company is Mr. Christopher Borch. He has more than 35 years of engineering, manufacturing, and management experience in the semiconductor industry. And the COO of the company, Mr. Low, has also more than 35 years of experience in semiconductor and precision engineering. And Mr. Chow, the CFO of the company, also have more than 15 years of experience in auditing and accounting. He joined the company since 1996. So all the top management of the company are really experienced and have been in the same company for a long period of time. So this will show that they are really committed to the long-term success of the company. Next, we like to know who are the insider of the company, and we have to check the outstanding share capital trend. Insider ownership. So insider are someone who have more than 5% of the shares of the company. So they are usually called substantial shareholders. So we prefer the management of the company to have the shares of the company to align with the shareholders' interest. So on the other hand, we also need to check the outstanding shares trend. So we want to avoid those companies that share the numbers of shares keep going up in the past, because this is really diluting to the shareholder. So let's go to our case study, Micromechanics. The founder and the CEO of the company, Mr. Christopher Borch, is a major shareholder of the company. So as you can see in this table, Mr. Christopher Borch and Sacadia, owned by Mr. Borch, together is about 50% of the shares. And you also see Mr. Low also owns 5% of the shares of the company. So I can say the top management of the company own the share of the company. They are really aligned with the shareholders' interests. So how can you get the shareholders table of the company? You can get it from marketscreener.com. So it's a free website. So let's say we go to marketscreener.com here, and then you type the company name, Micromechanics, and then you go to this tab called Company. When you are here in the Tech Company tab, so you'll get the business summary, the sales per business, sales per region numbers, who are the managers of the company, who are the members of the board, how many float. Float means how many shares are available for trading in the public. Then here are the shareholders of the company. So we can get these tables. So from this table, you will know who are the substantial shareholders. So what you need to do is to check whether the management of the company own the shares. Okay. Next, we like to check the outstanding shareholdings. So as you can see from the chart below, the weighted average diluted shares outstanding is stable. As you can see, the numbers are really stable. The trend is really stable. There's no sign of significant dilution of shareholders' interest over time. So what we would like to avoid is that the trend is going up, meaning the company keep issuing shares to the public, or they do a private placement, which can be very diluting to the shareholders. So how can you get this chart? Is that you can get from Ticker Terminal. It's a free website. So let me show you. So you can go to Ticker Terminal. So you can go to Micromechanics. Then you go to Financials. what you need to do is that you go to the income statement, you click on weighted average diluted share outstanding, and then from there you will see the weighted average diluted shares outstanding over the past 5 years. You can even click from to drag it to 2004 to see the over the past 15 to 17 years the weighted average diluted shares outstanding. So as you can see here, this company is really has a stable shareholder shares outstanding trend. So I hope this sharing will really benefit you in looking for the data and in analyzing the management of the company. So in the next video, I will talk about the valuations of the company. I will see you in the next video.